Well, a sweeping overhaul of Indonesia's tax system gets the green light from Parliament. Consumers will be hit with higher taxes on goods and services, while businesses will forego a planned corporate tax cut, all in the name of broadening the government's revenue base and reining in a budget deficit. Now, the plan is to increase a value-added tax on nearly all goods from the current 10% to 11% by April next year, and then to 12% by 2025. The corporate tax rate will stay unchanged at 22%. Other measures in the bill include a higher income tax rate for the wealthy, a new carbon tax, and a new tax amnesty program. Well, Chani Vatvani joins us live with more. Chani, quite a lot of pushback to the plan despite it getting through Parliament. So how does the government justify the timing given the precarious nature of the Indonesian economic recovery?
Well, the aim of the Indonesian government is to rein in its budget deficit within the legal limit of 3% of GDP by 2023 from an estimated 4.85% next year. Remember, Indonesia has been battered by COVID-19 and it has struggled with funds for its pandemic stimulus as well as restoring economic growth to more than 5% next year as well. So authorities are looking to boost state earnings with this new tax law. And the government is also looking to add a top income bracket with this law as well, as Indonesia seeks to become a high income country by 2045. Now, domestic value added tax was the largest contributor to tax revenue last year, bringing in some 25% of total tax collections at about $20 billion. And an increase in VAT could very well result in tax collections higher than that figure. Now, we've also got a new 35% income tax bracket for people earning more than $350,000 a year as well. So Indonesian government looking to definitely boost their tax base with all of these new regulations.
Now, also another tax amnesty also in the cards. So what is it planning?
That's right. We do have yet another tax amnesty on the cards set to kick in from January the 1st to June 30th of 2022. Now, this means that taxpayers can disclose net assets that have not been disclosed or are not disclosed yet in a statement to the state. Now, these net assets will be considered as additional income and subject to final income tax. Now, authorities considered the previous round of tax amnesty in 2017 successful, managing to expand their tax base and managing to bring in about $10 billion of state revenue, despite a higher than expected figure.
Well, thanks for that, Chani Vatvani there in Jakarta.